Now the last topic in this chapter, that is factors affecting the choice of source of finance. What all are the factors that we have to take into account while deciding on to the source of finance which is to be used? Number one being cost. Now there are two costs that we are going to be talking about here. That is the cost of procuring the funds and the cost of using the funds. We have to make sure at all points of time that both of these costs, they must be less than the benefits that you are going to derive from that particular source of finance, right? Secondly, financial strength and stability of operations. Now when we talk about these fixed charge sources of finance, that is your loans from the commercial banks or your debentures, you know, जिसके ऊपर compulsorily तुम्हें interest तो हर समय देना ही देना है, every year you have to give whether you are earning profit or you are earning a loss, and installment, the principal amount also is to be repaid in installments. So you should go in for these particular sources of finance only if you have a good financial strength, or in other words, if you are, you know, if there is a stability in your operations, meaning the flow of money, there is a regular flow of money for you to be able to repay these debts on time. Then form of organization, it is only a company form of organization which can raise money using shares and debentures. Otherwise, if we talk about sole proprietorship, if we talk about joint Hindu family business, or if we talk about partnership, you know, they have to arrange for money. They basically rely on their own capital or maybe by taking loans from the banks. Then purpose and time period. Now for what purpose you require money? All right, that means for expansion of your business, you can't be relying on bank overdraft. Fine, because that has to be repaid after in a short interval of time. So depending upon the purpose for which you require money, you have to choose the source of finance. If I require money for a period of about 10 to 25 years, then definitely it's better to go in for loan from financial institutions, right? But if I require money only for a period of 0 to 3 years, then definitely public deposits is a better source of finance. Then coming to risk profile. Now when we talk about the risk profile, if a company is ready, it's a risk taker, only then it should go in for sources like debentures. Okay? And if it is a risk averters, then something like equity shares, they are a safer bet to go in for, right? Then control, depending upon how much of control you are ready to share. Okay, because if you raise money by issuing equity shares, that is going to lead to dilution of control. But if you are taking a loan from the bank, if you are issuing debentures, if you are issuing preference shares, that is not going to lead to any dilution of control. All right. Then effect on credit worthiness. Now there are certain sources of finance which do affect the credit worthiness of an organization. For example, if there are secured debentures meaning that debentures which have been issued by mortgaging certain assets of a particular company. इसका मतलब ये रहता है कि आपने पैसा दिया है कंपनी को पर आपको कंपनी के ऊपर विश्वास नहीं है. That's why you have taken some assets as a security. तो जो unsecured debentures है, it is going to create a kind of insecurity amongst them that whether am I going to get the money back or not. Then comes your flexibility and ease. Now if you are taking a loan from a financial institution, definitely they are going to be imposing restrictions on your working. So if you have other options available, fine, then one can go in for that. Tax benefits, if you want to avail tax benefits using a particular source of finance, then one should always go in for the source of finance which involves a payment of fixed charge. Okay, for example, your debentures or loan from bank, commercial banks, etc., because the interest payable on these sources of finance is tax deductible and leads to a reduction in your tax liability. That was all about this chapter.